When we talk about value added tax, this is stuff that you did in bookkeeping already, but I'm just going to run through it again. So there are certain things that you will record input VAT against, obviously that being a CA, which stands for, I hope so. Thank you. Okay, Bongani is with me. So those are your current assets. So something bought, checks issued, received, receipts received. Okay, you go and you get the receipt because you bought something. Debits on the bank statement, and then credit losses or credit notes. Typical things there were for input VAT. Then for your output VAT, something sold, anything sold, checks received, receipts given, credits on the bank statement, and then I say ST insurance payout. That means a short-term insurance payout. Did I explain that to you last week? Every month, on a month-to-month basis, as you pay your insurance premium, you claim VAT. So now when there's an insurance payout, you have to pay VAT. Okay. And then typical standard VAT items is stock, rent, amenities, postage, stationery, telephone, short-term insurance, equipment services, charges, delivery vehicles. Those are typical standard VAT. And I use the word typical because they come up both in the bookkeeping and in this subject as your transactions. So that's how I found them. I went, look at a question and I said, these are the things that typically come up there. And when you see any of these, then you know that it is standard VAT. Typically, no VAT. Okay. I should actually say no VAT amount, because it doesn't mean that because there's no VAT, there is no entry on the VAT return. Sometimes you have a zero net result, but you still have to indicate it on your VAT return. I'm going to show that to you on the next page. So sometimes something is not the supply of goods or services, and then there will be no VAT. Some things like that is wages, VAT payments. You can't pay tax on tax. I've said that many times. And then payments made to creditors or payments received by debtors. Why? Because you dealt with the tax, with the VAT, the moment the invoice was given. So that's why it's not applicable now. Then there are certain things that are not allowed. It's obviously not allowed to claim VAT if you're dealing with a vendor that is not VAT registered. Refreshments, staff room expenses, and passenger vehicles. Okay. Interesting what happens with a passenger vehicle, though, when we start working with the monthly pay-as-you-earn returns. I'm going to show you that. Okay. Then there are certain things that are exempt from tax. Car license and interest are two of those. Some things are already a tax. Property tax and income tax. So if you have a property tax or income tax, or your VAT payment that was, you just submit your return, but you only and you still have time to make the payment. Then by the time you make the payment, you can't pay that on VAT again. And then there are certain things that are zero rated, like diesel, petrol, and this important one, exports. Because on your VAT return, there is a place for exports that you must indicate your exports. I think it's only there because there's a lot of fraud happening there. People claim exports when, in fact, that truck, it leaves some of its cargo behind before it leaves our ports, and then it's still sold in South Africa, but then there's no VAT that's being paid on that. All cash and it's pocketed. Don't worry don't feel sorry for SARS. SARS overachieved this collection period. I think they said they collected what? Something like 17 billion more than they planned. So they're happy. It's all because of the mining industry. Our economy would have been in the doldrums, but we have mines. And that's just stuff in the ground. And so you can buy in Zimbabwe, don't worry. There's still stuff in the ground. It's not being taken out at the moment, but it's there. What do you think is going to happen to the copper? Going to walk one day and come to South Africa as well, like the immigrants? No, it's going to stay there, And at some point, when the mining companies are ready to go back there, they will start mining again, and the Zimbabwean economy will pick up again. So before an election, don't blame the Zimbabweans for our internal problems. Okay, there's not that many of them here. And one day they'll go back. You'll go back with them. You'll have the asset, and you're going to work for those. You're going to work for those mines, and you're going to do well. Okay. Now let's have a look at the VAT 201 return. This is not the VAT 201 return. Okay. I think in your assignment 3, those of you that are actually far enough to actually get to assignment 3, when you download assignment 3, the VAT 201 is in there. But this slide tells you where to post the things on the VAT 201. So if you see a 4 or a 4A or 11 or any of or 15 or 17 on the VAT 201, you can come back to the slide and you say, this is where I'm going to post it. Okay, have a look. Now, something that, all of these subjects, there's always little marks for nothing. But the problem with marks for nothing is if you don't do that, you also lose the marks for nothing. So here they say, I said to you, complete the vendor details and contact details in full. That question always starts the same. It says, you are the bookkeeper for this company. Whose information is then required there? Yours. Now, if you want to give the ICB on that form your correct details, telephone number, blood type, bank account number, you are welcome to do that. Okay, I would not advise it though. No, I don't know. Maybe one of the markers that mark these things there has a delinquent brother that's just come from jail, and then the guy is going to use that information against you. Nobody's going to check it. That's what I'm saying. But make sure that you complete the line. If you don't complete the line, you lose the mark. Yes. Assignment 2. Okay. Yes. Was that assignment 2? Okay. No, that's fine. But now after today, you'll be fine with assignment 2. Wait. Okay. So then, of course, so if you in section, so the way it works, there is a section A and a section B. Your output VAT, if your business is successful, your output VAT will always be more than your input VAT. But if you are battling now, your input VAT is going to be more. Okay.
Except if you work in our Tamba export.
That is true.
Yeah, then your sales can be more than your input.
That's true.
Input is that, and all your exports, all your sales are exports.
That's true. Okay, good point, Arthur. Okay. So in point 1, you will only include the sales of trading inventory and nothing else. So the only thing that you will record under point 1 is the sales of trading inventory. You will then, so this amount here is the sales amount. Okay. Then you are going to include that VAT included amount. You're going to calculate the VAT, and that VAT amount you're going to post to 4. Okay, so as far as the sales of trading inventory is concerned, you include both the amount including VAT as well as the VAT amount itself. So that when they do a spot check, they can say, Nelson actually worked on 15% and not some percentage that is sucked out of his thumb. Okay. Then there is a second thing, which is under point 1, but it's point 1A. It is the sales of capital goods and services. Capital goods, I think in your assignment, you sell an old computer, or sometimes you sell an old delivery vehicle. Okay. Those would be capital goods. They're not trading inventory. And then there's always services for which you always also get money. So both the sales of your capital goods and your services will be included under 1A. Once again, you record the amount inclusive of VAT, then you calculate the VAT and you post it under 4A. Okay. Then we have sections 2, 2A and 3. And they are specifically for amounts that are zero rated, exports, and exempt and non-supplies. That is why when I did it with you last week, I said to you, you identify your VAT category. Is it input or output? And then you write all of them down. And then you indicate why you had a zero in some cases. Because when you fill in the 201 return, you still have to put those amounts. There's no VAT, but you have to put those amounts for zero rated in 2, the amounts for exports in 2A, and the amounts for exempt and non-supplies in 3. Okay. Sections 5, 9, and 11 on your VAT return is not part of this course. Okay. This is a part that you will fill in or should have filled in if you do tax or if you do financial statements, but not in bookkeeping and not in business management do you have to fill in sections 5, 9, and 11. So what are you going to fill in there? Nothing. Leave it open. Okay. Then you are done with your output VAT. But now look at it. If you, no, not done yet, sorry, I'll lie, because we still have 10 and 13. If you get an insurance payout, like you will always get in this course, you put down the VAT inclusive amount, you calculate the VAT, and you transfer that calculated VAT amount to 11. It's on line 10, and you put that under 11. And then you can calculate your total output VAT by adding 4, 4A, and 11. Now, if you have a look at the form actually guides you to do all these things. So if you, but if you don't understand the form, then go back, look at what I'm doing today, and just make sure that you fill it in correctly. Okay. In the exam itself, because of the time constraint, haven't really seen the VAT return to be filled in. Okay, they will ask you to fill in an abbreviated. So the abbreviated, you're just actually looking for the totals, but that you do in those columns of yours. Okay, then you get to section B, which is your input VAT under point 14. You take the capital goods and services bought. They are not, SARS is not concerned with the amount, they are concerned with the VAT amount only. So you calculate the VAT amount and you put that under point 14. Then point 15, other goods and services bought. Okay, now it's very difficult which services you put where. Okay, doesn't really matter. Okay, but as a general rule, it's just the other way around than what you had with the output VAT. With the output VAT, you had the sale of capital goods and services second and the sales of trading inventory first. With your input VAT, you first look at the capital goods and services bought and then the other goods and services bought, which will really be trading inventory. So under point 15 are your trading inventory and the services that you buy specifically for the purpose of your business. Okay, but I don't think SARS is going to send an inspector to check your services bought and they say and to ask you why did you put it under 14 when it's supposed to be under 15. Okay. There are definitely rules, but I don't know those rules. And the markers do not care that you know those rules either. You must just make sure that once you've completed those columns, everything that can be transferred to the VAT form is actually transferred, because that's why you did it. Okay. Then you have 14A, 15A, 16, and 18. It's imports, change in use, and other, and it is not part of this course. Don't worry about it. Don't fill it in. 17 is bad debts. the VAT amount only. Okay, and now you can go and you can calculate your VAT input by simply adding 14, 15, and 17. Okay, and then you will have your VAT payable or refundable, where you will take the total for section A, output VAT, minus the total for section B, input VAT, and that is the total amount that you have to pay to SARS or that you can claim to SARS on a monthly basis.